Good afternoon and welcome to BizTech's ASEAN Midday Market Watch. Our guest today is Vishnu Varathan, Head of Economics and Strategy at Mizuho Bank in Singapore. Vishnu, as always, great to have you on the show.
My pleasure. Thank you for having me, Brian.
Now, before we get your insights, let's take a look at the region and see how markets have been performing this morning. First of all, the Chinese and Japanese markets are still shut. We will start off close to home with the SGX, which at 3,152.2. It's down 0.85%. Bursa Malaysia is at 1,586.58. It's down 0.11%. Now, moving on to the Hang Seng, it is pretty flat at 0.01% up at 28,559.80. Australian shares are up 0.62% at 7,112. And rounding off the numbers, we've got the Kospi, which is at 3,147.37. It's up 0.64%. Now, Vishnu, what's your view on market performance across the region this morning?
Well, I mean, it does look like it's a bit of a mixed market. We did have Yellen's comments about higher rates initially, causing a round of jitters, and then there's relief that she's quite clear about not at all suggesting anything for the central bank or impacting independence. And I think she even clarified that her view is that the fiscal policies in the US will not cause inflation in a big way. So I think she's come about to placate markets. Markets have a bit of relief seeping through them, but I think the biggest takeaway for us is that markets are still caught in that tension between reflation and rising cost pressures across, with some need for the Fed to have already acted under the traditional framework, and that's conflicting against what the Fed is saying. So we do have a point of potential policy inflection 6 to 9 months down the road that markets will be jittery about from time to time. So we are going to have somewhat twitchier markets going forward.
Okay, then how should we tweak our investment mindset to this new reality where the narrative is changing?
I mean, certainly we need to start thinking more actively about inflation hedges. Despite the fact that we are coming from a weak point in terms of growth, so on and so forth, we do need to have a good inflation component, inflation hedge component in our basket. We also need to think about the divergent outcomes that we will see in this market. So how we want to go about a very uneven recovery, whether some sectors that are still buffered will tend to do more. And we also want to position for sectors that could have a very quick recovery once we see a little bit of light at the end of the tunnel, particularly with the tourism multipliers coming in. But these need to be positioned not only in terms of where we put our investments across sectors, but also in terms of timeline, the switch out into the pickups that we could see coming through as the economy evolves and works its way out of this rather tenuous and bumpy area it is in now right now.
And also one of the things, Vishnu, that is basically the elephant in the room constantly is across the world, while we have this narrative of global recovery, very much export and manufacturing driven, but we have that specter of COVID hanging around, and India is a good example of that and how basically it could go all wrong. And even when you get it right, you've got the likes of Singapore now going back into lockdown.
Absolutely. I mean, this is one thing we need to be very aware of. I mean, it is not dissimilar to the kind of advice parents would have proffered on their kids, which is don't let complacency seep in. That's one. On a more technical level, we also need to realize that this is an ongoing containment effort, and vaccine is at best a two-legged stool.
Absolutely, it's not a panacea which every markets had priced in earlier in the year.
No, not at all. And the thing to think about it is that vaccine is one very important cog in this huge machinery. And in India's case, I think it has become very clear to us that depending too much on vaccines and expecting vaccines to supplant rather than supplement containment exposes us to this big fallacy, because at the end of the day, vaccination is a linear event. Mutations and COVID outbreak is an exponential event. So we don't want to pit linear against exponential. We know how that goes. So this is why ongoing containment remains very important. And I think it's a false choice between the economy and health. I can't emphasize that enough.
Now, on a different note, commodity prices have been on a tear. Now, give us your perspective on how various commodities would play out, in this quarter.
I think if you're talking about disconnect in the economies and I think pricing, commodities bring the story forward really well, particularly industrial commodities. But there is some reason behind that mania as well. I mean, to some extent, markets are betting on two multipliers here. One multiplier is the reopening of major economies, including the US, where you can have the construction multipliers coming in to really boost the industrial metals, the industrial commodities. And then you've got Biden dangling a $2.3 trillion infrastructure plan that's going to be supplemented by a $1.8 trillion healthcare education plan. So that's also really lifting your industrial commodities. So you've got copper, iron ore, and all doing their records. And in fact, get well ahead of your precious commodities. Energy is a much broader and more important commodity. It's across sectors, but that's also why it cannot have as high a beta, because to the extent that a lot of the sectors are held back, and very importantly, air travel and tourism, energy will not make the same comeback. This is from the demand side. So they're not going to make as sharp a comeback. From the supply side, we also know that it's much more difficult to get your mining output out. Whereas for OPEC Plus, we know they've been idling capacity and itching to start it up again. And this is another reason why energy prices will be buoyant, but perhaps not going to get unbridled about the upside, because we expect supply to start dampening the price impact from the ongoing demand recovery that we expect in the second half of the year.
Now, Vishnu, this is a data-heavy week. What are the key data points and events in the rest of the week we should be looking out for that would move markets? Obviously, the big elephant in the room is that expected 1 million jobless numbers that are out on Friday.
Right. I'd say we're in an elephant park right now rather than a room. And I think the other thing that markets want to have a look at is how ISM services comes out. The interesting thing for us is that when ISM manufacturing numbers came out in the US, the headline was a bit of a disappointment. I mean, don't get me wrong, it was still a great expansion, but instead of accelerating, it decelerated, whereas the price component was really through the roof. So that's a little bit of a mixed bag there.
Okay.
So to what extent this is replicated in the ISM services would be a good gauge of how the services economy and the manufacturing economy is panning out. And then you are right, jobs. But for markets, it's a bit more specific. They want to think about how jobs then plays into the Fed's policy calculus, whether it's got a policy impact or not, because otherwise we would be going for as strong a jobs number as we want. But the reason why markets would be a lot more nuanced is if it's strong enough such that Fed starts talking about getting there, then I think markets will start worrying about taper. And their thought process is taper going to be in first half of 2022 or late 2021. So these are things to look out for from the data.
Right. Vishnu, as always, thank you very much for your insights.
My pleasure. Thank you for having me.
Now, we've been speaking to Vishnu Varathan, Head of Economics and Strategy at Mizuho Bank in Singapore on BizTech's ASEAN Midday Market Watch. Check out www.biztech.asia for business and technology conversations. Please also like and subscribe to our Facebook and LinkedIn sites. Thank you very much for tuning in.